Hi, grade 12s. We are looking at accounting today. So I'll be focusing on how to deal with a loan, especially when we are working on your statement of financial position. So I have a few adjustments here and I just want us to do them together. So we have loan from certain bank and I'm just gonna read the adjustments. The first one says all transactions with respect to the loan were recorded. So everything was recorded here. Okay. An interest of 142,250 rands on the loan is capitalized. A fixed monthly installment, including interest, was paid in full. So payments always include interest. And however, they didn't tell us the payments that we are making, the fixed monthly installments. So maybe that's something we have to calculate. And lastly, the capital portion of repayments will increase by 10% over the next financial year. That's the current portion on loan, right? Okay, so before I start, I want to deal with two formulae or two equations that you have to know for you to be able to do a loan. So the first one will be opening balance. I'll just write opening, but yeah, just know it's opening balance, and then you're going to add interest capitalized, and you're going to subtract repayments, and that will be equal to your closing balance. So opening balance is the amount we owe, for the loan at the beginning of the year. Closing balance is the amount we owe for the loan at the end of the year, right? Okay, and then that's the first equation. The second equation now goes something like this. You're going to have current portion on loan. I'll just use abbreviations. Current portion on loan, CPOL, that's current portion on loan, is equals to repayments minus interest capitalized. So these two these two equations, I need you to know them, and you will not struggle anymore with dealing with a loan. So going to the statement of financial position, for our non-current liability, we'll have loan from certain bank. We'll just name it like that. And then for our current for our current liability, we'll have current portion on loan. As you know, whenever we are dealing with a loan, we are dividing it into two parts. The first part is the long-term, part, or the non-current liability part, and then the second part is the current liability part. So the non-current liability is basically what we have to pay towards the loan over a period of 12 months, and then the current liability part of the loan will be what we have to pay within a period of 12 months or within the next financial year. Okay, now let's start calculating. So already, as you can see, we need now we need to find our repayments, right? Because we haven't been given an amount for repayments. So we'll use this first equation that I have made. So looking at my balances, I have my opening balance to be 1,280,750. So I'll just do it here, a calculation. 1,280,750. That's my opening balance, and I'm going to add my interest capitalized, which is 142. Here it is, 142,250. 142,250. And then I'm going to subtract now repayments, and that's what I'm looking for. I don't have it, I'll just write it as repayments. And then I'm going to have my closing balance, which is 1,159,000. Okay, let me just write it down. 1,159,000. So I'll just be working backwards. So when I work backwards, I'll change the signs, right? So I'll have minus repayments to be 1,159,000, and everything will just have an opposite sign. So I'll have minus 142,250, and then minus 1,280,750. Minus repayments to be minus 264,000. So I'm looking for repayments. I'll just multiply by -1. So I'll have repayments to be equals to 264,000. Okay, so that's the first part. Now I have my repayments. From repayments, I can get now my current portion on loan. But then also just take note that the capital portion of the repayments will increase by 10% over the next financial year. And as I said, the current liability part of the loan is what we have to repay over the next 12 months. So I'll have my repayments now. I'll make a calculation. Let me make it here. My repayments, which is 264,000, minus interest capitalized, which is 142,250. That's my current portion on loan, and there will be 121,750. However, this 121,750 is going to increase by 10% over the next financial year. So I just have to find 10% of this, right? So that's just going to be 12,175. So my actual current portion on loan will be 121,750 plus 12,175, and then it equals to 133,925. So this is my current portion on loan. For my current portion on loan, current liability, I'll have 133. I'll have 133,925, and then for my loan, from certain bank, or what I have to pay over the next from above the next 12 months, which is my non-current liability. Here I'll just have my closing balance, which is 1,159,000, and I'm going to remove the current portion on loan, which is 133,925. 1,025,075. So basically that's how we deal with a loan. I hope that made sense. Let's meet each other in the next video, and good luck with your final exams.